Hi everyone, it's the Catholic CEO Henry Kutarna. Today's topic in the Catholic Business Wisdom series is legal structures. Now, I'm not intending that you become a lawyer. Just like when we talk about finance and accounting, you don't need to become an accountant. But here are some topics that you should be extremely well versed in and in which you must make decisions. To go into business, you need to know which of the following points apply to you and which do not. I'll begin by saying that in business, when you set up a business, whether it's a side gig, a major corporation, a bricks and mortar store, or a service, you're going to have to decide whether it's an incorporated business using your state or province or your country's legal structure, or an unincorporated business in which you will work in what is called a sole proprietorship, a solopreneur, or an individual business person. So first point is decision on incorporated or unincorporated. The risk of an incorporated business is that you have to pay some taxes, you have to pay some fees, you have to pay ongoing registration fees to keep your corporation alive. The upside is that you get a firewall of protection between you and your personal assets and the assets of the corporation. So in case somebody sues you or you run into financial trouble, it doesn't actually affect your personal business. In an unincorporated business, the upside is that you have fewer costs. You do have to still pay taxes, but it's done in accordance with your personal income tax return as opposed to a separate corporate tax return for the incorporated business. So there are ups and downs. Of course, the risk on an unincorporated business is that if somebody sues you, they can come after your personal assets, your house and your car and your vehicles and so on, and your equipment. If you're unincorporated, you can also, in case of financial trouble, put at risk your entire family's income as well as assets like your house. Whether it's an incorporated business or an unincorporated business, in the US system, it's called a DBA, doing business as. So you can, in effect, create a corporate name or even a registered corporation, a numbered company, as they say. But you can also create a moniker, a trade name. In the Canadian system, it's known as a trade name. In the US system, it's known as a DBA, doing business as. That's a way to describe your business that is a way that's more focused on what the customer actually sees and understands about your business. Whereas the name of your company might be something personal to you, or it might be something quite anonymous and quite uninteresting to your client. Second is that if you're going to incorporate your business, in the US it will be called a limited liability corporation, and in the Canadian system it'll be called a Canadian Controlled Private Corporation, CPCC. And these are simply mechanisms. They don't differ very much between countries around the world. There are also not-for-profit corporations. So there's another distinction. If you're starting up a business, you're obviously going to have a for-profit corporation. You want to make money, you want to support your family, you want to create profit, create wealth. And there are other categories of companies called not-for-profit corporations, and these can be charities, which are registered or licensed in order to raise money, and they can issue tax receipts. They can be not-for-profit bodies that carry out a service, like a care home or a service for the disabled or something like that. They can be raising money for Mothers Against Drunk Driving or good works. They can be a charity. Your parish might have an entity, might be the Knights of Columbus, or something within the parish might be an incorporated not-for-profit body. In the US, one of the most common forms of incorporation for a not-for-profit corporate body is called a 501c3, and that's a section of the US tax code that describes it. In terms of the Canadian system, it'll be either a not-for-profit or society incorporation or a not-for-profit corporation. There are various names in different provinces, but the concept of the difference between a for-profit corporation and a not-for-profit corporation is what's important here. There are new models at work. There is, for example, probably globally, I'd say, most of the Western countries at least, there's a thing called a B Corp, the letter B, ABC, B. The B Corp is really a model where there are certain social objectives that go beyond the typical business objective of making profit, building wealth, and providing a service. A B Corp promises to achieve a certain standard of equity, employment fairness, certain social policy objectives. A lot of B Corps can take you to an extreme, honestly, and I certainly don't recommend it for a Catholic business, because you're going to find that some of the elements of the B Corp are actually inimical to the Catholic faith. But I want you to be aware of it, because not only is it fashionable, one might say, but it's also increasingly a way for capital. If you're going to be going into the banking system to borrow money, or you're going to go to capital companies, venture capital, angel capital, for equity injections, they increasingly are looking at B Corps and providing them with better features and a better response. So you might have to consider that. Location of your corporation, very important point. Usually we think of locating our corporation where we live, and that's not necessarily always the best way. For example, it's well known among the corporate providers of service, lawyers, and so on, that Nevada or Delaware are locations where the conditions for setting up a corporation are very favorable to business. They may be a lower cost jurisdiction. They may be a place where it's easier to set up a company, and maybe where there's less scrutiny or there's less involvement in the regulatory process. I'm not saying that they're using anything that's less than highest quality professional setups, but I am saying that there are some advantages that exist in a Nevada Corp or a Delaware Corp. There's no such similar concept in Canada, because the jurisdictions tend to mirror each other in how they're set up. You need to also, if you're going to be considering corporate models, to know a little bit about the partnership model. So the partnership model resembles a corporation to many extents, but it also reminds you of the personal solopreneur or unincorporated business, because a partnership is still treated as a corporate entity in terms of its treatment under the law, under the tax system, under the legislation. But it's not actually a corporation. It's an agreement among people to work together. So your accounting firms, your lawyers, your consulting firms, the big consulting firms, and even some of the medical clinics and the doctors that associate themselves, or the specialists like the dentists or pediatricians or any of these other professional medical services, they often arrange themselves in what is called a partnership arrangement. Still complicated, still has many rights and responsibilities, still has a lot of detail, and there's still a provision made for distribution of surplus and profit, which is something different than the not-for-profit world, where you cannot distribute surplus. You must retain the surplus, or what you would call the profit. But you should examine the concept of a partnership, especially if you're considering developing a service that resembles the ones I just mentioned, or even some of the newer services like personal care services, where, let's take even a haircutting shop, fashion, beauty place, whatever we call those today. There's a tendency for them to become partnerships where you will have a common facility that you rent, but every professional stylist, for example, will rent a chair, so to speak, in the shop. You might be familiar with this model, and that's an example of how a partnership model works. It differs from the corporate model and the not-for-profit model, but it can be a valuable way to organize yourselves. Also, the co-op system, the cooperative system. It's an ancient model in many ways. It goes all the way back to England in the Industrial Revolution, but also in the Midwest of the United States, and certainly in the prairie provinces of Canada. The cooperative movement was a way to provide the one share, one vote model, as opposed to the corporate model where the number of shares determines your influence in the company, and you can own 100% of the shares or 50% of the shares or 90% of the shares, and therefore you have voting rights that are commensurate with that. In the cooperative model, you have the concept of one member, one vote. But the co-op model is really useful today, in today's terms, for artists and musicians and people who, for example, share a workspace. There might be a shared space or a co-working model. Startup companies are often using the cooperative model where you rent a single location and everybody has a desk and you share the expenses and then you share the revenue. Grocery stores and gas stations are quite a famous co-op model where you can get what you call patronage dividends at the end of the year. So some surplus can be distributed in the co-op model, but it's distributed on the basis, the same percentage of your spending in that co-op grocery store. Let's say you spend X dollars a year and that's 1%, let's say, of the total spending. You can get 1% then of the dividends. I'm going to turn now to 10 quick topics of things that you must take into account when you set up your model, your legal structure. So having said everything that I just mentioned now, let's turn to these 10 items that you should remember to focus on and concentrate on. Number one is when you set up a corporation, you should distinguish between the board and management. And this will be difficult if you're a small shop, let's say a family business or a small enterprise. But the board, that is to say the chair of the board, the vice chair, the secretary, the treasurer, and various committee heads. These are the governing bodies. These are the people that govern the organization and they set overall strategy. Whereas management or staff are the ones who carry out strategy and policy. And that's the management team, the president, the CEO, the directors, the various officers, the various people who perform functions all the way down to the lowest level of job. In a small company, you might be participating in both, but you need to know the difference, and it makes a great deal of difference in how successful your business is. Number two, remember that in a corporation, you're going to have shares, and you're going to distinguish your ownership. The shares are going to be valued at a certain dollar price per share, and as your company grows, hopefully the share value increases, but there's going to be various classes of shares: voting and non-voting shares, preferred shares, common shares, retractable shares, convertible shares, a lot of complex factors that you don't need to know today, but it's important that you understand that there are various shares and there's a lot of distinction and differentiation between these share structures. You're going to have to make a decision when you build a company that you're going to have the difference in shares. And number three then is the USA, the Unanimous Shareholders Agreement. It can be called something different in different jurisdictions, but the concept of a USA is it's a contract. It's an agreement between and among all the shareholders of a company that determine how they're going to conduct business. How do they vote? How do they make decisions? What happens if somebody wants to sell? What happens if somebody wants to buy in? What happens if somebody dies, gets divorced, becomes incapacitated, and so on? The USA is an important document, and it's a very tricky one to negotiate because it must be all done ahead of time before you set up your company. And so you may not know what eventuality awaits you around the corner, but the USA, the Unanimous Shareholders Agreement, is an important point. The fourth point to recall is that you must follow certain processes when you set up a corporation. You must have an annual general meeting. You must make decisions. You must record these decisions. You must hold different processes, meetings, different discussions to prove that when the company sets out on a certain direction, it has had the full approval of either the board, if the board has been delegated that function, or the shareholders. And sometimes there are distinctions between the board meetings and the shareholders meetings. The annual general meeting could be one that is led by the board and where there are shareholders present. So a lot of technical details there, and you should figure that out and understand that. The fifth item of my 10 quick topics: the board decisions are to be recorded in resolution format, so a mover, a seconder, and an approval. That set of resolutions is always tracked in a corporation in something called the minute book. Again, the minute book might be called slightly different things, but generally it's known around the world as the minute book. It's the official record of decisions in the company. It must be attended to carefully. Detail is important because in the case of a lawsuit or a dispute, the accuracy of how you cite things in your minute book is very important. Item number 6 is the distinction between the location of your company and where you are doing business and where you are selling your product. So there's 3 factors. You may have a headquarters in a certain state or a certain province. Your company operations, its offices may be located in various cities. You may have offices around the country. You may just have a single one down the street from your house. And then you also have customers, and you may do business in other countries. And so your revenue sources may come from other countries. So this becomes really a tax issue, an analysis of your approach to taxation and how your revenues are accounted for. It leads to discussion about your accounting policies and so on. Location of all these 3 things matters to your business. That is where it's headquartered, where you operate, and where your customers and revenue are. Now, another item to consider in my list of 10 topics here is that you will have annual reporting requirements. So your city, your town, your state, your province, your country may require you to file certain annual filings, and they are named various different things, but they are done legally to continue the corporation, articles of continuance. They may be done to make sure that your shareholders' information is publicly on file. If you're a private corporation, you'll notice I'm not talking here about publicly traded corporations, which have a whole different set of rules. But generally speaking, annual filing requirements, it's your responsibility to know what those are. It's your responsibility to know when they should be filed and in what format. So one needs to become well educated on this. Number 9, annual costs associated with all these things. If you are an unincorporated business, a sole proprietorship, you may not have costs. But when you're an incorporated company, you will definitely have filing costs, annual costs to continue your operations. And so those fees and charges are set by the various bodies that authorize you, and they must be paid immediately, or you are going to be denied the service. So if you want to continue your corporation and you can't afford to pay the annual fee, your corporation will be, as they say, struck from the register. You need to be budgeting and planning for this. And then finally, the annual income tax return, the filing thereof. You may have to make quarterly payments or monthly advance payments depending on the size of your company and depending on the country and the state or the province in which you live. In Canada, it's called the CRA, the Canada Revenue Agency, and it is the body that sets out the tax rules for your company. Each province has its own set of tax rules as well, and when you file in a Canadian system, you're going to file a provincial tax return as well as a federal tax return. In the U.S., you're going to file with the IRS, the Internal Revenue Service. You're going to file a similar process. You're going to have a state tax regime, and you're going to have to file a state tax return, and these of course vary just like the provinces. The tax rates, in some cases there's zero tax, in some cases they're very high. You'll also file the annual national or federal tax return. So I've done a rapid fire list for you. All of what I've mentioned today must be attended to when you set up a company or when you start going into business, because even if you're going to operate under a sole proprietorship model, unincorporated, or if you're going to follow a not-for-profit or a co-op or a partnership model, many of the things I've talked about apply to you, and they must be attended to ahead of time when you set up in the first place, and then secondly, as you go through on an annual basis. And you need to know what the rules are, you need to get good advice, and you need to have an attorney or a lawyer, and you need to have a tax expert, and you need to have somebody that can help you to navigate all of these processes, because you cannot claim ignorance of the law in these areas. You must know what you're talking about, and you must definitely have the answer for each of these questions. So this is of some help, I hope, and we can talk more about it in future episodes. But for now, we've covered legal structures today. So God bless you and your business. It's the Catholic CEO, Henry Kutarna. I'll see you next time.